Welcome to the Keiser Report. I'm Max Keiser. You know, dozens of clowns are terrorizing California late at night, and the police want it to stop. This story highlights what we in economics refer to as trickle-down clown terror. While California is merely one state inside one country, there are a dozen equally creepy central banking clowns terrorizing the global economy. And due to this terror across the world, people are unable to sleep, thanks to rising food prices and austerity sandwiches causing their stomachs to growl so loudly it's impossible to sleep. Creepy central bank clowns are terrorizing the real economy. The Keiser Report wants it to stop. Stacy, can we stop the clowns?
It's true there are Californian clowns apparently terrorizing people across the state. I don't know if it's our friend, by the way, Alex Schaefer, who does Zerpy the Clown. He started that right here, right outside this studio. But according to the reports in California about these clowns roaming around the countryside at night, so far, no one has been harmed by any of the clowns, though the children who were chased by one of these clowns were left, quote, visibly shaken, which, of course, we keep on seeing every time one of these clown bubbles collapse that the central banks cause, whether it's in the Dow Jones or the FTSE or the housing market. People are left visibly shaken once that sort of thing collapses. But as you point out about austerity, the central banking clowns have, of course, harmed people with austerity.
Clown terror is a phenomenon that it's maybe that John Wayne Gacy, the serial killer who dressed up like a clown, was part of the beginning of this. But when you listen to Janet Yellen or Mark Carney or remember Ben Bernanke, the solitary figure who's dressed in an odd manner, whether it's Janet Yellen in her muumuus or Ben Bernanke with his beard, it has a clown-like effect on the populace who are jaws gaping in horror at the prospect of someone who's obviously divorced from any connection to an intellectual capacity, is engaged in a powerful job with their hands on the levers of global finance. It's like seeing a baby with a knife or a razor blade. You get frightened by it. So when you listen to Janet Yellen, you're saying, my God, this is a clown. It's a baby. She's carrying a knife called monetary policy. And at one, she's dressed up and she doesn't appear to be a frightening terrorist. But then at the end of the day, her policies end up terrorizing the globe.
Exactly. Though, mind you, only 1 in 4 Americans even know that she's a central bank head, where most, something like 1 in 6 think that Alan Greenspan is still the Federal Reserve Chairman. I think it's because his clown face was pretty convincing.
Yeah, he had a remarkably effective clown face. And which is, in my day, it was Paul Volcker. He was the central banker, and he was the opposite of a clown. He was, a serious banker who used to really command a lot of authority. But now those days are long gone, and now you have this new crop of central bankers that, come out of a clown car, riding a tricycle, sniffing helium all day and sounding like, people in Soho after a night out.
Well, okay, but the clowns are scaring the children across the world. Europe forsaken in ETFs as record money pulled on economy. So record $1 billion was withdrawn from the Europe ETF. And investors are bailing as the economy threatens to fall back into another recession just after ending the longest contraction in its history last year. Equity losses approaching $1.6 trillion since September mark a reversal for markets that fund managers named as the favorites as recently as July.
Well, think about some of the classic clown, routines. One being, as I mentioned, the clown car. So a little car drives into the circus and the doors open and not 1 or 2 clowns pop out, but 5, 6, 7, 8, 9, 10. An infinite number of seemingly clowns pop out of the car. And this is the central bank trick, is that they are printing money that has no reasonable expectation to exist in the global economy. And the result is that they are creating this circus-like atmosphere where people are trying to collateralize cotton candy, essentially to buttress a global housing market that's built on the jelly beans of nonsensical clowning.
Well, Mario Draghi, the European central bank clown, he is warning that that Europe is sinking back into recession. But what are they doing about it? They're continuing to harm the children. These are like you said, John Wayne Gacy, these are like clowns that harm children. As the headline reads, the disgrace of sacrificing a generation. We now have Greece with over 60% youth unemployment. We have Spain and Italy near 50% youth unemployment. And Ilargi from the Automatic Earth says that the only solutions in the minds of the leadership are reforms. Make it easier to get rid of the older people and let the young do their jobs at half the price, and growth, both of which have failed for all of those years. But that's all, folks, so they press for more of the same. Who cares about the young until they can unseat you? But like you said, you know, the clowns have certain routines, okay? They go in and they drive the car, or they smash a pan over each other's head, or they, you know, squirt little things and confetti pops out, and the audience always cheers. But that's been their baby boom generation that always cheered, woo, I love that trick, woo! You know, press more money printing and the stock market goes up, woo, that's an awesome trick. But the generation being left behind, the tricks aren't working on them. The clown tricks aren't working on them. In fact, it's starting to scare them. Clowns used to be quite popular. As we see now in America, in the UK, clowns are scaring people instead.
Yeah, the clowns by the abandoned clowns by the roadside. I think this is what's scary, is that they appear to be clowns that have been kicked out of the clown car and are lost in the wilderness with no one to entertain. And they're just in the dark with their bright noses leading the path over the cliff into some abyss of a monetary black hole. And it's just that sense that nobody is laughing anymore at Janet Yellen's parlor tricks and her clowning about. That's not producing any GDP growth whatsoever. As a matter of fact, deflation, wage depreciation, economic contraction is accelerating at an alarming pace. But yet they keep coming out there with these dressed up, bulbous-nosed, overly made-up, fright wig-wearing, you know, clowns that are not having any impact whatsoever. Nobody's laughing anymore. You know, I just read a story, actually, there's a comedy club somewhere that charges people by the laugh. They got the whole club wired up so that when you laugh, you get charged per laugh. Now, that's not good comedy club etiquette. You shouldn't be charged to laugh. You shouldn't, but this is the way the economy is going. You're going to be charged to laugh, charged to breathe, charged to think, charged to shake hands. You know, everything is going to be a charge to try to bail out this deflationary spiral brought on by the clowning banks.
Well, actually, you mentioned the clown sitting in the dark. Here's like a photo or two. Look right here on the screen. These are from California, these scary clowns sitting in the dark. But here, let's turn to, again, Italy, where Mario Draghi used to run the central bank there, and now he's running the central bank in Europe and destroying, you know, scaring kids across Europe. Well, what has happened in Italy, where they used to actually manufacture, produce, export, be a thriving economy that would occasionally devalue their currency, okay? But, well, here is a story of Clotilde Narcisi and Luca Soliman have run the Cafe Orefici 200 feet from Milan's iconic Duomo Cathedral for 10 years. Forced to sell their business because of high taxes, they say their only hope now is to leave it in Chinese hands. One of the people, Narcisi, who's 43, says, quote, "They are the only ones who are buying. We want to sell. Taxes are too high. We work 8 hours a day for the state and 1 hour for us." Of course, the 8 hours for the state are 8 hours for not only the banking clowns that collapse the economy, that great, interesting, fun trick, and all the pensions and benefits for the over 50s, because those baby booming audience love the clown tricks from before them. But here they're having to pay all these taxes to bail out the state and all those clown tricks from before. Now, interestingly, a website has been set up in Italy for these Italian companies, small and medium ones, to sell to the Chinese. So Cafe Orefici is among the 18,000 advertisements from businesses and individuals that have been published since February last year on vendereicinesi.it, sell it to the Chinese, a website that helps Italians stricken by the third recession in 6 years attract bids for properties, products, and services from Chinese suitors.
So all these 18,000 small to medium enterprises are just putting up a sign, buy us. Hey, China, buy me.
Yes.
because they just can't deal with an Italian economy anymore, a part of the European economy that is entering into this free fall. You know, a lot of people are quite concerned now because this European economy, despite all of the Troika and the IMF and the money printing and all that stuff, it's still sinking into the muck. And apparently there's no tricks left in the bag of tricks, the clown tricks, to make it. It really looks like it's heading into an historic now downward pre-war spiral.
Well, the Chinese premier is in Italy today, rounding up a whole week of across Europe. And in Rome, however, according to this article in Bloomberg, the in Rome Pompey store, famous for its tiramisu dessert, is in talks to sell one historical shop in the San Giovanni area to the Chinese, according to La Repubblica. Quote, residents will have time and peace to learn Chinese, the owners wrote in a controversial sign on the counter that riled the local Chinese community, according to the newspaper.
Well, I mean, it's come full circle because pasta was invented in China. So, you know, now the Chinese are reclaiming all their pasta that they had on loan, I guess, to Italians for a while. But now it's all coming back. It's reverting back to Chinese ownership.
So, again, these clown policies across Europe, led by the likes of Draghi, who keeps on failing up, 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 up. Every Goldman Sachs banker fails all the way up to central bank levels, yet they keep on having more and more harming the children. These clown policies are actually physically harming the children, unlike the clowns in California, who are only scaring the children. Here, they're actually harming the children because bankruptcies have reached a record high this year in Italy, with more than 8,000 companies going bust in the first half of the year alone in Italy. So this is actually physically harming people. The clown policies of the central banks have done nothing, and yet what are they doing? They were in a double down. Remember, the ECB hasn't openly printed as much as the Fed, as the Bank of England, but they're pushing. Mario Draghi wants them to print more. It's only Germany that has kept them from going all full-scale clown crazy.
Well, Germany is not known for its sense of humor over the years. There's not a lot of German clowns and comedians. You know, they're not into this. So maybe the clown wave will meet its end in Berlin, and some rational non-clowning will take over. But then again, you never know. Angela Merkel could be putting on the clown suit soon enough. Stacy, thanks for being on the show.
We're all clownifornia now.
Oh, dear. Well, stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to world-renowned mathematician and monetary scientist, Professor Antal Fekete of the New Austrian School of Economics and FeketeResearch.com. His latest paper is called Counterproductive Monetary Policy. Professor Fekete, welcome back to the Keiser Report.
Thank you, Max. I'm very happy to be here.
Now, before we get to your paper, Professor, I want to talk to you about, you were a child in Europe during the last Great Depression and World War II, and how would you compare today's financial crisis in Europe to what happened back then, both in terms of government policy and how it's all worked out? Your thoughts?
There are similarities and dissimilarities. The dissimilarity is that this is a much bigger thing. The world debt today is enormously greater than it was in the 30s. And the United States government was in a very strong financial position in the 1930s, the government.
Right.
Okay? Today, the US government is very, very weak. The credit of the government is very weak. The dollar is weak. So
let me jump in for a second, because the U.S. dollar, of course, is over the past three months to 6 months, or actually since going back a couple of years now, it seems to be gaining some strength. It's trading up in the last couple of years. A lot of people are now calling for the U.S. dollar is going to start a secular bull market. I see you smiling. What are your thoughts?
I'm smiling because this was all reversed last week. The US dollar fell very sharply, and the price of gold went up, which is nothing unusual. What is unusual is that everybody expected the gold price to correct. And you know what? It didn't.
Right.
Does it mean something? I think it does.
Okay, now I want to stick on this Europe thought for a second, because youth unemployment in Spain, Italy, and Greece are near 50%.
And has been for quite some time.
And of course, in Europe, the policy from the Troika and from the IMF was a policy of austerity. And did this policy make any sense? Did it work? Is it working? Is that the right way?
Well, are there any tangible results? I don't see any, and I don't think there will be any. I think they are following the wrong script.
Okay, now let's contrast that a little bit, because in the United States, the policy was monetary expansion. That was the contrary policy to austerity. And yet you've just written a paper now called Counterproductive Monetary Policy. So let's talk a little bit about that. What do you mean counterproductive monetary policy?
I mean what the subtitle of my paper says. They are shooting for inflation. I think I use the word sowing, S-O-W, sowing inflation and reaping deflation, because the policy is altogether wrong. The policy is to make the central bank buy government bonds, hoping that this will increase the money supply, which will push down interest rates, and that's good for the economy. But it isn't.
It seems to me that this policy has been very good at keeping banks that should have gone bankrupt, keeping them alive.
Well, that's what it is.
And they've been...
And that's all what it is.
And they are... been gobbling up the economy and not allowing the economy to grow. They've become an impediment to the economy in a lot of ways.
Wall Street benefits, Main Street suffers, and it's getting deeper and deeper in debt. And this is what I mean by counterproductive. They should be helping the Main Street, and Wall Street can look after itself. And that's not what is happening.
So you say you're sowing inflation and reaping deflation.
That's right.
So in other words, these policies, could you say that these expansionary monetary policies are actually causing deflation?
Exactly, that's what I mean, and making it worse. And at one point it will become irreparable, because the more deflation, there's a threshold after which they lose control. If this hasn't already happened, because it might have. What I mean by that is that pumping money into the economy backfires.
Yes, well, in the United States, under the Federal Reserve, they have pumped something like $4.5 trillion into the economy. Yeah. The Bank of England, they expanded their balance sheet by several $100 billion. That's increased in percentage terms the debt to equity in the Bank of England by 800% or something incredible. But that leaves the European Central Bank under Mario Draghi. He's the last bank standing that hasn't decided to turn on the spigot and print maybe 5 or 6 or 7 trillion euros in debt. Is he going to do that? Because in other words, they're telling him that he needs to do this to save the economy. According to you, if he does do this, it'll be the final nail and create a deflationary spiral and utter global collapse.
That's what I mean. And you know something? The Swiss National Bank increased its balance sheet even more than the Fed or the Bank of England. Very few people realize that, but they did. And this means that they just lost all sense of proportion, all over, across the board.
Now there's a referendum in Switzerland, isn't there, that they want to monetize gold and bring back gold?
November the 30th.
How do you see that playing out?
I have my doubts that the Swiss people have the good sense of voting yes. They are being pressurized by the Swiss National Bank and the government and the politicians, with the exception of 1 or 2 in the whole country. And they will say no. which means that they are very happy with the status quo.
What about the German people? Because the German people are very sensitive to inflation after what they experienced back in the 1920s, the hyperinflation, and yet this is what is being asked for them to accept. Are the German people, are they more willing to get behind some kind of movement to stop the ECB from...
I don't think so. They don't trust the government. It's a waste of time, waste of energy. What they do is they buy gold and try to buy it offshore, which will keep it from the government learning about their actual gold holding. And they are quite justified. What happened under Hitler? What happened in East Germany under the communist rule? The government grabbed the gold and the people were left out in the cold.
Yeah, but we don't see that reflected in the price of gold. You know, the demand for gold is enormous, and the demand for silver is off the charts, and yet the price has been relatively weak. How do you square that circle? How do you work that?
I don't follow the gold price. I don't think it's a meaningful indicator. It could be rigged, and it is being rigged. It could be open to all kinds of influences, economic and non-economic. And I don't think there's any benefit in watching the gold price. If anything, you watch the gold bases. But that's another subject which we couldn't discuss today.
We talked about that on our previous show. People can refer back and watch that show. But if you say that, for example, people will describe there's a difference between the physical gold price and the paper gold price.
That's what it is, yeah.
So paper gold price, the futures price, is the price that, for example, in the silver market, for every dollar of buys it takes to move the price of silver on the upside, it's met with $50 of sales on the other side of that trade. There's almost a 50-to-1 buy-sell ratio to move it up at all, because there's always those sellers waiting there. Are they, presumably, they're working with some kind of the monetary authorities to try to make this monetary policy work, but as you're pointing out, there's no traction. It's not creating the growth. It's not creating the GDP growth. It's not creating the jobs. It's not creating the wages. It's not working.
No, it's not.
Is there an end point where, at what point do the wheels come off completely and you see some kind of breakdown?
I think when gold goes to permanent backwardation, and by this I mean there'll be no gold available for paper dollars, paper pounds, paper Swiss francs, because people are not going to give up gold for paper anymore. That's what the technical word is permanent gold backwardation. And that's coming. Just how soon, I cannot predict, and I don't think anybody can. But it's coming. And in the meantime, there is more and more negative, counterproductive effect. I would like to, if I may, give an explanation why this counterproductive effect is present.
We have about a minute and a half.
A minute and a half. Good. The secret is bond speculation. If the Federal Reserve is buying more bonds as it is, then bond speculators will preempt the Fed. They buy first and then dump it in the lap of the Fed.
Front running.
Yeah, and make a good profit in the process. This profit is risk-free. So, in other words, the more bonds they buy because they want to push interest rate down and they want to increase the money supply, the more ammunition they give on a gold plate to the bond speculators. It is as simple as that.
Now, when you reverse that trade, and they say, because Ben Bernanke said he could reverse his quantitative easing in 10 minutes, and he could sell his assets at any time, and there would be a market for it, and there would be no problem. But based on what you just said, the reverse is true. People get in front of his trade and sell before he sells, and you have it cascading down in an uncontrolled way.
Two answers. One is the bond speculators are smart enough to get inside information. And if the Federal Reserve is selling, they can preempt that too.
Right.
And this is a copycat action. They copycat what the Fed is going to do.
But the main point is, and we have to leave it there, is that these policies, all they do is feed the speculators who add nothing to the economy. But we have to wrap it up there. Professor Fekete, thanks so much for being on the Keiser Report.
Thank you very much.
All right, well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Professor Fekete of FeketeResearch.com. If you'd like to contact us, you can tweet us at Keiser Report. Until next time, bye, y'all.